Hello, I'm Kamal Santamaria. This is Counting the Cost on Al Jazeera, your weekly look at the world of business and finance. This week, gold, going for broke. The price of the famed yellow metal is plummeting, which is good news for buyers, but bad news for the producers. We look at the global effects of gold's decline as the classic safe haven for investors goes out of favour. Also this week, the aviation business. While some international airlines call for protection from the growing Middle East carriers, we talk to the CEO of British Airways and Iberia, who says bring on the competition. And with Egypt seeking more financial aid as its currency reserves dwindle, we ask what it's really like to do business there. Hello everyone. Who would have thought that a tiny island in the Mediterranean would be the trigger for gold's decline? It does sound a little far-fetched, I'll give you that, but the island in question, Cyprus, may be forced to sell its own gold reserves to pay for its own bailout, which of course raises the prospect of other Eurozone nations having to do the same sort of thing. But while Cyprus may have been the trigger, it is things like devalued currency, inflation and money printing, which have all already undermined the precious yellow metal. So we've come down here. This is Doha's gold and jewellery souk, which is obviously a very good place to get an idea of the merchandise and the product, and we'll have a closer look at that in a moment. But also to think about the nature of the market, the winners and losers, if you like. Go back 18 months or so and we were looking at a gold price of $1,923 an ounce. The high levels, they're great for the miners who are bringing this stuff out of the ground, great for these guys here, the traders who are bringing in more money for the product. Not so good for the buyer, of course, who's having to pay a lot more for their gold. But now, well, about $1,200 an ounce, so it all completely changes. In fact, comparatively speaking, we're kind of talking bargain hunting time, crucial time as well in this part of the world. Indian wedding season comes up in June. Gold is a very popular gift. A large Indian expat population here. You put it all together and it could be a really good time for the buyers here. You come to a place like this, there's some pretty elaborate looking pieces in the window there, but we'll come inside and have a look at the raw product, if you like. These gentlemen here have been very kind to lay out some pieces for us to talk about. Have a look at that. That's raw gold, isn't it? And we've weighed that out about 215 grams. So that's about 7 ounces. $9,700, almost $10,000 for what is essentially a stick of gold. Of course, you're not going to buy it like this. This is, the raw product. You'd look more for a refined piece like these gold ingots. This is 50 grams worth. If I can get it out of the packet, there we go, 50 grams worth. About 1.7 ounces, and we're talking for this, these kind gentlemen here would sell it to me for about $2,265 US, over $2,200 US. So it gives you an idea, finally, we talk about the price of gold a lot. That's what it looks like, a lot of money for a very small piece of gold. And no, I didn't buy it, even at those apparently low prices. Let's talk to someone, though, who's got a lot more knowledge on the topic of gold. His name is John Greeve. He is the managing director of Mutiny Gold, a mining company joining us from Western Australia in Perth. John, we know the price is well down from those highs of almost, what was it, $2,000 an ounce. Does that make it difficult for you as a company to raise money to do your work?
Kamal, that's a very good question. I think right now no one's thinking of charging out into the market today. It's very unstable. It appears to be a situation of all the scenarios. This is about the worst one that's come home. So in terms of going out, for instance, with banks at the moment, it's very much a wait and see situation. The banks we're talking to are telling to us 6-8 weeks, and they believe that the price will settle down and they'll be, funding will be available. In terms of the equity market, I think it's very unstable. It's probably one of the worst days since 2008, and we expect a little bit of panic to hit the market again tomorrow. So I would say that you would consider the equity market shut, which is why companies like ourselves have gone out and done streaming deals, because we think the equity is really pretty tight.
Could it get as bad, and maybe not for you in Australia, but maybe other parts in the world, could it get as bad as mines having to close down, jobs being lost, that sort of bottom line?
The predictions are that, to give you an idea, Kamal, the price is really at a very dangerous level globally, right? Western Australia, from what I'm seeing, about 60% of our mines will struggle to make a profit in this type of environment. Our cash costs in WA for many mines are above 1,200, it's certainly above 1,100 Australian. In terms of US dollars, when you add in the full cost of capital, debt and replacement of resources, these mines are getting very marginal. I mean, for Mutiny, it's okay. We're at about, we're less than $700 cash costs. So you'll see globally, mines are very similar to Mutiny's. Globally, mines run on cash costs of around 700, particularly in the US. Total costs less than 1,100. So it's tight, but at the moment it's okay. But the prediction for the future of gold is that it will restabilise as some mines shut down, and certainly demand is strong. If it gets worse, if the disaster scenario for gold is that people panic, margin loans come in, the ETFs start collapsing, horrific scenario, you could see price fall another $200. At that point, you would see mining companies probably finding their hedge positions are more profitable, exiting their hedges, and then you would see shutdowns.
There is, of course, a flip side to all of this, isn't there? And again, it's not for you as a producer, but really for the buyer is what it is. And that's the fact that it becomes a buyer's market. And at least with gold, you have it, you buy it, it's in your hand. And it is, if you pardon the pun, a solid investment, made even more solid by the fact that you've got, currency devaluations and money printing and the like and all these sorts of things. It's good to have a lump of gold in your hand.
Kamal, absolutely. And two very recent examples. 2 weeks ago, South Africa, the rand, gold is a hedge against inflation, but gold is also a hedge against currency. The rand devalued to a level where gold had peaked, and many people in South Africa unloaded and made profits. You saw the same recently occur only a week ago in Japan. So what happens is around the world, a lot of people buy gold and save it up over a long period of time. So a lot of holders of gold haven't been buying it just over the last year or two. They've been buying it over the last 7 years. So they would have been buying it at prices of $200, $400, certainly less than $1,000 an ounce. What we think happened is that there was that massive trade. 15% of the world's production was sold in half an hour. Clearly a short designed to shock the market and damage the market. As Roberts, the US Undersecretary for Treasury, said, who's the culprit? No one knows at this point. But it's certainly created some panic and some profit taking, but demand is there. And so gold will continue to be a stable product. It may be bad for a little while, but it won't take long for it to recover.
John Greave from Australia's Mutiny Gold. Good to talk to you. Thank you, John. And still ahead on Counting the Cost, the Cola Wars revisited in Thailand. There's Pepsi, there's Coke, and then there's Est. I'll tell you about that a little later on. But first, a look at the world of aviation. And, the rise of the Gulf Airlines has caused a lot of competition concerns in Europe. Consider this from Jean-Cyril Spinetta, who is the CEO of Air France KLM. He told the Financial Times, if you compete with Gulf carriers in an open sky situation, it's sort of suicide. It means European air will disappear. Is that the view across Europe? Well, earlier in the week, it was something I put to Willie Walsh, the boss of one of Europe's biggest aviation players, International Airlines Group. To the rest of us, that's British Airways and Spain's Iberia. We began by talking about the state of that company. Let's put it this way. The British economy is not in a good way still. The Spanish economy is still not in a good way. And you are the CEO of two national carriers of those airlines. Is it too cheeky of me to say how's business?
No, it's not. Business is okay, because you're quite right. The UK economy, I think, is best described as anemic. But the London economy is very different to the UK. And what we've seen in recent years is that while the UK has been in recession, there's no evidence of recession in London. And I think London has almost detached itself from the rest of the UK and is an economy in its own right. And British Airways benefits from having a significant presence in London. Spain, as you quite rightly say, the economic environment there is very poor, and I think will be poor for some time to come.
Yeah, but you're exposed to it. I mean, this is the nature of the airline business. You are exposed to everything, aren't you? It doesn't matter about two economies there. You've got everything. How do you keep it together in this environment?
It's hard work, but there are opportunities around the world. You know, there are a number of the economies that we serve from London and from Spain that are doing well. Iberia has a significant presence in Latin America. Latin American economies have been growing at a reasonable pace in recent years. And British Airways, flies significant presence in North America. And despite the stories about the US economy, it's still been growing. You know, it's been growing at a rate of about 2% per annum, which is lower than it had been in recent times. But 2% growth per annum in the US is actually quite significant.
So have you adjusted the business? Are you now flying thicker routes to places like Latin America and all that to pick up on that? And
exactly, that's what we're doing. What we're trying to do is reshape our network so that we have a greater presence in growth economies. British Airways has traditionally had a relatively weak presence in markets like China. Big presence in India, but relatively weak in China. So we've been increasing our presence there, and we've announced recently we're going to start flying to Chengdu in September of this year. We started flying to Seoul in Korea in December of last year. So we'll grow our network into Asia, which is a significant growth market.
We've mentioned Spain a little bit and Iberia. Let's talk a bit more about that. I know, hindsight is 20/20. Benefit of hindsight is a great thing. But do you feel you missed something with Iberia that at the time it looked good, and now it's not so much?
No, we looked at it in the long term. Our view, and I've held this view for a long time and I've expressed it publicly, is that consolidation will benefit the airline industry. And I believe we need to see further consolidation. And I don't measure these moves as a success in a short period of time. I look at it in the long term. And I think Iberia is suffering from some cyclical downturn, which is impacting on a lot of Eurozone countries, and has some structural issues as well.
You don't want it to be your Greece, though, do you? The thing which drags everyone else down.
No, and I don't think it will. The truth of it is, we're restructuring Iberia to ensure that we're more competitive by taking action internally. And I think that's what you've got to do. You've got to look at how competitive you can be regardless of the external economic environment and adjust your business accordingly. And that's what we're doing. There are deals that we should have done in the past. I've been openly regretting the fact that BA didn't merge with KLM when it had the opportunity back in 2000. I think it would have been a great new company then, and clearly would have been a fantastic company today, but that deal wasn't done, and it's a deal that can't be done now. But consolidation is definitely happening in our industry. It's benefiting our industry, and I'm pleased with it.
Because it's a competitive industry, we know that. I want to ask you about competition in this part of the world, in the Middle East, because the stoush between the European legacy carriers and the Middle Eastern carriers is well known. The European carriers don't like the competition that comes from this part of the world. Isn't it just competition? Why does there seem to be an edge here? There seems to be something different here.
No, I agree completely with you, and I'm not one of those CEOs that has been critical. In fact, I've been very supportive. I admire what's happened with the Gulf carriers here. I've been, very quick to identify the benefit that they have created for their economies here, and to identify what governments here have done to support aviation, recognising the economic.
But made it tougher for you, and made it tougher for the European carriers.
But the truth of it is, the UK has an open skies agreement with the UAE. So Emirates has been flying to the UK since 1986. We have open competition, and we're profitable flying to Dubai head-to-head with Emirates. We fly to Doha, we fly to Abu Dhabi, we fly to the three main hubs here in the Middle East, and we're profitable. And that's because we've adjusted our business. Where you get some other European carriers complaining about the Gulf carriers is because they haven't adjusted to this new competition. We had to adjust to it over 20 years ago. And I actually welcome the work that the Middle East carriers are doing. I think there's been significant development, and I really admire what Akbar Al-Bakr has achieved here in Doha, the growth of aviation in Doha. 2001, not that long ago, you had 2.8 million people going through Doha International Airport. Last year it was 21 million people. You don't get that by accident. You get that because you have people who are determined, people who are ambitious, and people who want to develop aviation for the benefit of the economy in the long term. I'm all for it.
Okay, while we're talking about the region, or Qatar in particular, maybe you can put your other hat on, and this is, this trip you're here with the London Chamber of Commerce, I guess trying to foster business ties between the two countries. Now, Qatar's involvement in the UK is well known, it's well documented because it's big. It's the Shard, it's buying up
Harrods,
exactly, or there was talk of Marks and Spencer and all these sorts of things here. The flip side? I mean, it's got to be a very lopsided relationship. Let me put it that way at this stage.
You go back to what you said earlier. The UK economy has been weak, and therefore, what we're doing here with the London Chamber of Commerce is encouraging small and medium-sized enterprises to look to economies like Qatar as growth opportunities for them. So rather than relying on their traditional markets, and 8 out of the 10 biggest export markets for the UK is in Eurozone. And what we're saying to businesses, don't just look at your traditional markets, look for new opportunities. And we believe there are fantastic opportunities
Like
here.
what? What sort of opportunities?
Everything. That's the truth of it. When you look at what's happening here in Doha and in Qatar, and the ambition they have, and the World Cup in 2022, a major world sporting event. What we're saying is, look at what London achieved back in 2012 with the London 2012 Olympic and Paralympic Games. And a lot of our member organisations were involved in that. And what we're saying is use that expertise, use the confidence that you've developed doing great things in 2012 with the Olympics, and look for opportunities to provide those services to businesses here in Qatar.
And dare I say, bringing a bit of Britain to Qatar. The reason I say that, there's a huge British expat population here, and they're crying out for sort of signs of home, I guess, and things like that. I mean, is there something? Is there an opportunity being missed there at the moment?
I think there is. I think small businesses, in particular in the UK, have been reluctant to look at exporting. We did some research last year which showed that only 35% of small businesses even considered export markets as an opportunity for them. And what we're trying to do is just give them the courage and the confidence to look at these growth markets, fantastic economies. You just can't but be in awe of what has happened here in Doha. And we're saying to business, come down here. Look at the opportunity, get to meet people. You're not going to get it overnight, but start to establishing links, and who knows what is possible in the future.
To Egypt now, which is facing its most serious financial crisis in decades. Now, it's not short on help. In fact, there are 4 countries who've offered multi-billion-dollar loans. Problem is, Egypt was already deeply in debt, and if you start taking on more loans when you're already in debt, well, you get the picture. Anita McNaught takes a look now at Egypt's delicate debt situation.
Egypt is running out of dollars. Foreign currency reserves are down to 13.4 billion, enough for just 3 months' food, gas and oil imports. But 4 countries have thrown Egypt a lifeline. Number 1 is Qatar, with loans and investments worth $8 billion. But that's left some Egyptians questioning whether one country should suddenly acquire so much influence. Controversial TV satirist Bassem Youssef broadcast a choral salute mocking Qatar's largesse. Then there's Libya. In March, Egyptian security forces arrested 3 wanted members of the Gaddafi regime after a gun battle in Cairo and deported 2 of them back to Libya. 3 weeks later, Libya deposited $2 billion in the Egyptian central bank. Both governments deny the events are related. Salwa Al-Antari was on the board of the National Bank of Egypt. She says far too little is known about how the government will use these loans.
We have no transparency here whatsoever. If debts are just poured into a huge hole in the ground, this serves nothing. And this complicates the problem in the future.
Egypt's third would-be saviour is Turkey, giving Egypt $2 billion in aid, but only if Egypt welcomes the army of Turkish businessmen who travel with Prime Minister Erdogan, and if Egypt buys Turkish exports. So many Egyptians are asking, what is the quid pro quo? What price is Egypt going to have to pay for getting all these dollars? Then there's another problem. Egypt has to service the $36 billion in foreign debt it already owes. And it's going to need some of those Libyan and Qatari dollars to do that. So effectively, it's borrowing to pay its debt. And as any shopkeeper will tell you, that's a bad position to be in. But the government says it's managing a crisis.
We are facing a problem. The government has to do something about it, and not to wait until the bank balance is 0.
There's one vital commodity the Egyptian government needs right now to get its house in order. And this is what the loans buy: time.
So just how are businesses coping under these challenging conditions? Well, we've got Gerhard Nieslein joining us from Zurich to talk about that. He is the CEO of Erascom Development. You know, Gerhard, you must see a lot of difficulties, the types of things that you and your partners have to deal with in Egypt. Perhaps just tell us about some of them.
Sure. Life is difficult. There is, as a synonym, no police on the street, and people don't feel secure. But this, on the other side, is the advantage of our resort, where people feel secure and are still coming and staying and enjoying their holidays.
Do you think that people shouldn't be put off coming to Egypt to do business at the moment? You know, they might look at the whole country and everything it's been through since the revolution and think, well, no, that's not a place we'd want to do business.
Yes, you're absolutely right. And we were running the resort before the Arab Revolution at the rate of 85 to 87% occupancy, and we are now to 60%. So you see there are lots of tourists, lots of customers missing. But on the other side, when you are having for over 20 years such a successful resort, you have lots of repeat customers, people who feel well, who feel secure, who know the place, and this is why they are coming.
Are you confident about Egypt, you know, making a full recovery? You've pointed out that you've been insulated from the problems by your location, but what do you think about the country getting back to where it used to be, especially in where you work, the tourism sector, because tourism is just so important to the whole of Egypt?
It is very important, and we have the advantage that Egypt doesn't have any oil or gas. They just have the Suez Canal, and they have tourism, so they have to be very careful about tourism. Yes, I'm confident that Egypt will go back, but as everybody knows, they have major hurdles to overcome. The subsidy on the fuel, the subsidy on the wheat is something which is a major drain. You see the currency every day getting worse, so there are still some problems which have to be solved and have to be tackled in the first place.
And the way Egypt's going at the moment is trying to tackle the problems, or rather survive the problems, by taking loans from other countries and looking to the IMF as well. How do you feel about the effect that will have? It is obviously a short-term help, it's what's needed, but you know, long-term you have to question it.
To be quite frank, I don't want to be in their shoes because because right now they have to stop the drain on the cash, and how to sell to 85 million people that these two main subsidies on wheat and fuel has to stop. This is not only a major communication challenge, it's a real hurdle, and imagine in 6 months they want to do parliamentary elections, so this is a very difficult situation.
That is Gerhard Nieslein talking business in Egypt with us. Thank you, Gerhard. Finally this week, remember the Cola Wars, the great fizzy battle of the 1980s between Pepsi and Coca-Cola. Of course, it does still go on today. But in Thailand, where there's a $1.5 billion soft drinks industry, there is an added local dimension. We'll let Veronica Pedrosa take up the story from here.
If you're looking for Pepsi in Bangkok, you're likely to come across this instead. Thailand's first homegrown soft drink. Introducing Est, the local soft drink that's caused a revolution in the $1.5 billion beverage industry here. Until Est's launch, Pepsi was the king of fizzy drinks in Thailand, one of only a few countries where it beat rival Coca-Cola. But then Pepsi's management miscalculated and launched a hostile takeover bid of its Thai bottling and distribution partner, Serum Suk.
This is a case study for international businesses wanting to enter the Thai market. Most Thai business people stick together. Thailand is not against international business by nature, but culturally speaking, Thais do not take hostile takeovers very well.
You see, Serum Suk partnered with another local company, Thai Beverage. Just 6 months after its launch, Coca-Cola's taken full advantage of the battle between its two rivals. Est has shot to the number 2 slot, and Pepsi's trailing in 3rd place.
I think the competition is very high.
Like war.
Like war, I think that.
And with Thai Beverage expected to expand massively across the region, it might not be too long before you see Est elbowing out the giants in your city too.
And that is our show for this week, but there's plenty more for you online at aljazeera.com/business. You'll find the latest business headlines there. Also a link to the Counting the Cost page for you to watch this or any of our other previous episodes again. And if you want to get in touch, you can either tweet me at Kamal AJE or our business editor at Abid Oliver Ali, or drop us an old-fashioned email. countingthecost@aljazeera.net is the address. But that is it for this edition of Counting the Cost. I'm Kamal Santa Maria from the whole team. Thanks for joining us. The news on Al Jazeera is next.